Greetings traders out there in Traderland. This is the weekend edition. And this video is good through Sunday, September 30th, 2012. Alright, we got a round of stimulus measures from several of the world's most influential central banks, and that did help send the markets, and especially the S&P 500, zooming close to 6% higher in the third quarter. Third quarter is now behind us. Fourth quarter is now going to start coming up this next week. And if you look here, we really ended the third quarter on a pretty sour note here with the markets down. Dow is down almost 50 points. But for the third quarter, the Dow climbed 4.3%, the S&P up 5.8%, and the NASDAQ up 6.2%. NASDAQ leading the charge. And you had the energy and consumer discretionary and technology and telecommunications and financial sectors. They posted the best performance in the third quarter here. And actually, the only major sector that ended in the red was utilities, and that's usually indicative of a rally or a bullish market. And it looks like here several energy and metal futures rallied during the quarter as well. You had crude oil jumping 8.5%. Nice to see that. And let's see, gasoline surged 22.5%. Not bad. Gold for the quarter is up 10.5%, and silver higher by, get this, 25.2%. Big stuff there. Taking a look at the markets on Friday. Like I said, Dow down about 50 points. Everybody was down. And if you look here at the VIX, up 6%. We are knocking the door about 16. Commodities off yet again. But US dollar up about 0.5% here. And taking a look at the S&P daily, we started with this nice pop yesterday. Unexpected with the GDP missing all estimates. And for it to come in so low at 1.3 really shocked me to see an update, if you couldn't tell that from yesterday's video. But today things have simmered down. The question is, wow, there's no follow through here. Will we start breaking down? We could do that because after all we have 1, 2, 3, 4, 5 swings in the life cycle, and usually 3 to 4 is about max, so we are very extended. And if you look here down here at the MACD, we have a negative tick on the histogram. You can make your screen here full size so you can watch it in high definition and really see great clarity. But negative tick, we're sub-zero here, not so great. Take a look at the Dow. Dow, you know, just heading down. We're just caught up, starting to build a low base, but we're still above the 20-day moving average. NASDAQ started to make a pop, but now it's dropping. We are staying below now the 20-day moving average. This is the first weakness that we've seen for some time. So keep your eye on the markets. And the Russell's below the 20-day moving average, building a low base. No follow through on Friday at all. So that a lot of people and economists and analysts are saying that we could have a very bearish fourth quarter, and I see, I'm hearing the thunder in the distance right now. Let's go to the weekly chart on these guys. This is the Russell's weekly. We're in a down leg. We're just heading southbound, gang. So we have a decisive crossover on the MACD with a negative tick on the histogram. If you go to the NASDAQ is problematic because we have a major trend line, not a main trend line, but a major trend line break. It did break below, and that's telling us we could start heading lower. If you look here, we have a higher swing high in the making. However, you have a lower swing high on the MACD. That is a bearish divergence. If you look here at the Dow, this is a main trend line, but we close lower than the main trend line. Big problem. So again, bearish divergence, a negative tick, and we have a crossover on the MACD. Let's go over here to the monthly. Now the monthly, this is bad news. Look at the two blue lines here. It's a rising wedge. Let me help you see this better. If I go to a line chart, resistance, support, resistance, support, resistance. These two blue lines give us a rising wedge, which is bearish. We have a big time bearish formation. I thought it was going to be broken because we were higher, but look where we closed, right back at that resistance line. That's not by accident. Look here at the S&P, same formation, but we're a smidgen above it, so the S&P does have hope. If you look at the NASDAQ, it's grim again. Resistance, we come up, resistance. This could be a big fat M for murder. Double top trend reversal pattern heading southbound. We have 1, 2, 3, working on 4 swings in a trend. Life cycle of a trend is usually 3 to 4 swings. We are there now. We could be rolling over to the downside. If you look here at the S&P, oh, I just did that one. Let's go here to the Russells. The Russells here, we drop, pop, drop. Now, as far as the main trend line is concerned, that's bullish. We got above it. But we're having a hard time making a new high. This could be a short term double top, M for murder, and this could start heading southbound. All right. Now, while we're here, let's take a look at the banks. Now, the banks for the month, we had this base and we're popping. The banks look really solid, gang. We're above a lot of resistance at this moment. Not too shabby. If you look at a weekly chart, we're just in a down leg, starting to head down. We do have some support levels. So the banks, I think, are pretty solid. A nice bull flag at the rising 20-day. I'm looking for banks to go north. If so, the markets should in fact go north. Take a look at gold for you gold bugs out there. For you guys that know of others that like to trade gold, be sure to share this video with others. But a nice choppy high base. We're staying above all major moving averages and most even the EMA's exponential moving averages, which is really bullish. So I like what I'm seeing in gold. If you go to the weekly chart, we are overextended. Big pop. We hit our head at resistance. Now we're hanging up here. We need to build a base above 170 for me to want to continue to stay bullish with gold. And if you look at the monthly, we're now over a major trend line. Really nice to see that. So gold's looking really nice. Now let's take a look at Apple. Apple here, as far as the monthly is concerned, we had the high base pop, a high base pop, and now we have a shooting star reversal pattern, which is bearish. If you go to the weekly chart, on the weekly we have a rising wedge now confirmed. So this rising wedge, we're starting to drop with a big time bearish divergence. Apple has seen its high, and we saw a high of 705. I don't expect to see that anytime soon. I know, keep drinking the coffee, gang. And when I say coffee, well, let me say this: keep drinking the Kool-Aid, gang. It's probably a better term in this case. A lot of people are just sold on Apple, and you think that it's going to go to 1,000. It's going to have to come up with a better product than just the iPhone 5. It needs to be something that's going to really drive significant sales, and I don't see that being any sort of game changer, and I think that's why we're seeing a significant drop off. You look here to the daily chart, rising wedge, we broke down. We tried to rally on Thursday, but Friday we given it all back, staying below the 20-day moving average. I think there's more downside potential here. Let's take a look at Facebook. Facebook here on the daily, we had a nice run up, bull pullback, starting to head up again. We are above the 50 and the 20-day moving average. We could be stepping higher if you look at a weekly chart. Weekly chart, we had this drop, pop, a little bit of a drop here. It's trying to come back. On the monthly, we do have an engulfing pattern, almost a tweezer bottom. It looks like we could be putting in a bottom, and we could maybe be heading higher. So be watching that. We do have a nice bullish divergence here and a breakout right after that. Thing that really concerns me here is the VIX. The VIX, every time we get to these lows, let me get back to a monthly. Every time we get to these lows, we get a major spike in the VIX. We're here again, gang. And we could easily get a spike in the VIX. That means a major market sell-off. So it would come to fruition this fourth quarter, being a bleed out, and thus saith a number of the economists out there, but we'll see what happens. But the GDP coming in at 1.3, wow, that'll throw a wet blanket on anything. So let me end with this. I do have something I want to share with you all, and did you guys know this next week is Dog Appreciation Week? Now myself, I don't own a dog, love them though, but we're going to do something. If you go to the home page, and I'm gonna log out. What I want you to do, scroll higher, go down here to 201 videos. Now I'm gonna give you a significant discount here, and that's only if you own a dog. If you own a dog then I want you to click on this link, and I want you to put in a code. The code is this. You're going to put in dog crazy. It's only for this week. You're going to hit apply. This program is a $2,500 program selling for $700, okay? But watch this. That's going to drop down to $383 if you use dog crazy right here. And you're going to get the 201 trading videos. The 201 trading videos, you can read all about it right here. It's 5 significant courses, and it's going to be 6.5 hours long. It's worth $2,500. We used to sell this sort of information with Rich Dad Poor Dad, Robert Kiyosaki, Teach Me a Trade, Star Trader, Option Success, all those. You can go here and watch a video of one of the students, but here's everything you're going to learn. I give you all the tips and tricks, and I absolutely divulge all the secrets to trading. And so these courses are perfect for you if you've been out there trading a while but you need some formalized trading education. Certainly get those and take advantage of the deal if you're a dog owner. And this is what I ask of you. If you take advantage of this, send me a picture of your dog at Des, D-E-S, at groktrade.com, just to show me that you do have a pooch. So hope all is well. Be safe out there in the markets. Keep your head up, your eyes open, ears open. Make sure you're getting the very best of trading education so you can go out there and swim with the sharks. Take care, and the very best to you.